Welcome to the Deep Dive. You sent us a couple of really interesting sources today, and our mission is basically to pull out the key insights you need fast.
Exactly. Get you up to speed without you having to wade through everything yourself.
We've got a hedge eye market analysis from May 1st, 2025, and also a political and economic briefing, same date, pulling from electoral vote news and others.
Yep. So we'll connect the dots between market signals and, well, the bigger picture stuff. Politics, economics.
Perfect for you, our listener, if
Yeah.
you like getting the info efficiently, seeing different angles, but, without all the jargon.
We're aiming for clarity.
So today we'll hit a potential global economic slowdown, some pretty weird signals in the U.S. markets, and definitely some important political shifts happening.
Sounds good. Where should we start? Maybe the slowdown.
Yeah, let's tackle that global economic slowdown signal first. Hedgeye seems pretty focused on it.
They are. They're calling it hashtag Quad 4. That's their term for slowing growth happening alongside slowing inflation or disinflation.
Okay, hashtag Quad 4, slow growth, disinflation.
Got it.
And they have data backing this up, right?
Yeah.
It's not just a feeling.
Oh, yeah, definitely data-driven. They point to things like the CRB Commodities Index. It's down, 7% since February? That's significant.
Commodities, so raw materials, energy, that kind of thing.
Exactly. And crude oil specifically, that's fallen 25% from its high back in January. That usually signals, less demand globally, things cooling off.
Okay. And wasn't there something about China in the report, too?
Yes, good point. China's PMI, the Purchasing Managers Index, basically a health check for manufacturing it, actually slipped below 50 in May. Landed at 49.0.
And below 50 means contraction, right? Shrinking activity.
Precisely. So another piece of evidence pointing towards a global slowdown.
Now, that other source, the political briefing, I think it mentioned economists worrying about a U.S. recession, too. Does that tie in?
It does tie in. The electoral vote news piece mentions economists predicting a potential recession. They link it partly to President Trump's tariffs, and there was even talk about possible negative GDP growth for the U.S. in Q1.
So market data and economic forecasts are sort of aligning on this slowdown idea.
Seems that way. And Keith McCullough at Hedgeye, he put it pretty bluntly.
What did he say?
His quote was, "The art of the deal on China is to stay net short both China and commodities, basically betting that prices for Chinese assets and raw materials will fall. Shows strong conviction."
Wow. Okay.
Unquote.
So the takeaway is markets are already adjusting.
Yeah, Hedgeye says markets are pricing in slowing growth and disinflation. Investors aren't waiting around, they're shifting strategy now based on these signals.
Okay, but then things get complicated with the U.S. markets, right?
Yeah.
Because they're not entirely playing along with this slowdown story.
Not entirely, no. That's the gaping divergence Hedgeye talks about. It's really interesting. You've got the bond market acting one way and the stock market, well, acting another.
So break that down. What's the bond market doing?
Bond yields, especially the 2-year Treasury yield, they've crashed to new lows for this cycle, like really low.
And low yields usually mean investors are nervous, looking for safety, expecting slower growth.
Exactly. Classic hashtag Quad 4 signal. Money flowing into safer government bonds pushes yields down.
Okay, so bonds say caution, but stocks, the S&P 500.
Well, that's the divergence. The S&P 500 actually broke above a key resistance level, 5562. And Hedgeye's even eyeing the next potential resistance higher up, around 5693.
So stocks seem more optimistic, or at least less worried than bonds. That's confusing.
It is confusing, and it means you have to be tactical. Hedgeye's response shows that they're actually trimming some winners.
Trimming, selling off profitable positions.
Yeah, some of their long positions, things they expected to go up, like Treasury bond ETFs, TUA, a volatility product, IVL, a fund called CLOX. Maybe they think the easy money's been made there, given the conflicting signals.
But they're not just selling, they're buying some things too.
Right, selectively. They're adding longs in areas they think might do okay, even if growth slows. Things like consumer staples XLP. And interestingly, some international markets like India, INDA, and Argentina, ARGT, plus a specific stock, Celsius, CELH.
And they're adjusting their shorts too. Bets against stocks.
Yep. Covered some shorts, meaning they closed out bets against stocks like Meta, the regional banks, KRE, ELF Cosmetics. Looks like they felt those trades had run their course for now.
But they didn't cover everything. Still short Meta and Google.
Right. They mentioned staying short Meta and Google because those are near the top of their calculated risk range, basically, their expected trading band. So potentially overvalued in the short term.
But not Microsoft. They cover that short.
Yeah, MSFT showed what they called a bullish trend breakout at $395. Their signal suggested strong upward momentum there, so being short didn't make sense anymore according to their process.
This really highlights their approach, doesn't it? This whole signal-driven thing. And they mentioned something philosophical. Negative capability.
Ah, yeah, from the poet Keats. Sounds a bit highbrow for finance, maybe.
Maybe. But what's the idea?
It's about being okay with uncertainty, not needing to have all the answers right now, not jumping to conclusions, just observing, staying flexible. Given the market divergence, you can see why that mindset would be helpful.
Resisting the urge to force a simple narrative when things are messy.
Exactly. And they also mentioned Robert Greene's idea of the original mind from his book Mastery.
Okay, what's that one?
It's similar, about staying curious, open-minded, always learning, like you did when you were a kid, not getting locked into rigid beliefs, constantly adapting based on new information.
So less about predicting, more about reacting to the data, the signal.
That's the core of it. Their process is built around rate of change. Are things accelerating or decelerating? And they look at trading volume to confirm those shifts. Is the market activity backing up the trend?
Got it. And there was that mention of front-running information. What was that about?
Well, it's a bit subtle, but the idea is that by analyzing these signals really closely, maybe they can spot shifts before the news breaks or becomes common knowledge, get ahead of the curve, so to speak.
Potential edge from deep analysis.
Potentially. But they're also careful to say, look, this is our portfolio strategy.
Right. Not advice for everyone. You need to consider your own situation.
Absolutely. Your own risk tolerance, your goals, all that.
Okay.
Yeah.
Let's switch gears to the political side now. Based on that news briefing, we touched on Trumponomics and the recession fears.
Yeah, the briefing really digs into those potential contradictions. Like, tariffs are meant to help manufacturing, right?
Supposedly.
But they can also raise costs for everyone, hurt consumers, maybe even slow down the economy they're trying to boost. And then there's the national debt angle. It gets complicated.
Definitely seems like internal tensions there. What else stood out politically? There was something about a House bill.
Uh-huh. A bill aimed at expanding the president's power over how federal agencies work. That obviously raises big questions about, checks and balances, executive authority.
Significant potential impact on how government functions.
Could be. And then there was a legal item, a federal judge stepping in regarding a Columbia University student arrested by ICE.
Right. That touches on immigration, due process, ongoing complex issues.
Very much so. And underlying a lot of this, the briefing notes the really deep partisan divide.
Yeah, that wasn't exactly news, but it's a crucial backdrop, isn't it?
Yeah.
It affects pretty much everything.
Absolutely. It makes finding common ground or passing legislation incredibly difficult.
Now, staying with the political theme, but shifting slightly,
Yeah.
that briefing had some interesting poll data about Gen Z from Yale, I think.
Yes, the Yale Youth Poll. And what's fascinating is the difference within Gen Z.
How so?
Well, it looks like the younger group, say 18 to 21-year-olds, they show less support for Donald Trump compared to the slightly older ones, the 22 to 29-year-olds.
Less Trump support among the youngest voters.
Yeah.
And more support for Democrats in that younger group.
That's what the poll suggests, yeah. And the thinking is their formative experiences are different.
Makes sense. The 18-21 group really came of age politically during Trump's presidency and the whole COVID pandemic upheaval.
Right. Different context than those who are already in their late teens or early 20s before all that. Think about things like TikTok's rise, the post-COVID economy. It shapes views differently.
Interesting generational nuances there. Okay, what else? Oh, the IRS and Harvard's tax exemption. That sounded potentially explosive.
It's definitely a significant point. The idea that the IRS might investigate Harvard's tax-exempt status. Well, it opens up a whole can of worms about these big, wealthy universities.
Questions about their endowments, admissions, whether they're really serving a broad public good enough to justify the tax break.
Exactly. There are strong arguments on both sides, and it's been a debate for a while, but this brings it to the forefront. Any change there could seriously impact how these elite institutions operate financially.
A fundamental challenge, potentially. And linked to that, sort of, was the data on trust in media.
Yeah, specifically looking at trust levels among Trump supporters, the numbers are, well, pretty stark.
Low trust in outlets like MSNBC, CNN, New York Times, NPR.
Very low, according to this polling. But then you see much higher trust in, say, Fox News and also specific social media figures.
It highlights that whole net trust idea that I mentioned, the difference between strong trust and strong distrust.
Mhm.
Really shows the polarization.
Absolutely. It paints a picture of very separate information ecosystems. People aren't just disagreeing on issues. They're often operating from completely different sets of perceived facts based on where they get their news.
And figures like Elon Musk, his role with Twitter, that influences perceptions too.
Seems likely, yeah. His actions and commentary definitely play into how different media sources are viewed within certain groups. It's all part of this fragmented landscape.
Okay, one last piece in the briefing. Harvard sending a letter about Trump's tax returns.
Weird.
Connecting that to the administration wanting more control over universities.
Yeah, that was an interesting juxtaposition. It hints at potential friction, maybe even pressure, between the administration and places like Harvard.
And the mention of the Civil Rights Act of 1964 in relation to tax exemptions.
Right. It suggests a potential angle the administration might explore, linking non-discrimination rules to an institution's tax-exempt status. It adds another layer of complexity to that whole Harvard IRS situation.
So putting it all together then, quite a complex picture.
Definitely. You've got clear signs pointing to an economic slowdown globally based on data like commodities and China's PMI.
But the U.S. markets are sending mixed signals, with bonds looking worried while stocks are surprisingly resilient, leading to very tactical adjustments.
And layered on top of all that economic uncertainty, you have these significant political currents, deep partisanship, questions about executive power, generational shifts in voting patterns.
Not to mention debates over university tax status and these really fractured levels of media trust.
Exactly. It shows how interconnected everything is. You can't really understand the market without looking at the politics and vice versa.
Seeing these threads connect gives you that richer, more complete view of what's actually going on.
For sure. And maybe something to chew on. As we watch these economic headwinds potentially pick up, how might that interact with the political divisions we see? Could it make them worse? Or maybe shift them in unexpected ways?
That's a really good question to keep in mind as things develop. Lots to watch.